BigBear.ai is currently trading at $7.42, which is down about 3.64% on the day. Right away, many traders using platforms like the Robinhood app or Fidelity are seeing that drop and assuming the AI hype train is just letting off steam. They're looking at Nvidia stock pulling back and lumping BBAI in with it. But the reality of this specific move has less to do with commercial AI sentiment and far more to do with the complex, often opaque world of government contracts and the institutional profit-taking cycles that follow even minor contract announcements. This isn't just a simple sentiment trade, it's a reflection of the market's deep uncertainty about this company's very specific and very lumpy revenue model. The common belief, the expectation for BBAI is that it's a high-octane lottery ticket on the artificial intelligence boom. It's a name that flies around social media, a stock people try to time for quick gains, much like they might trade Tesla stock options. The narrative is simple. AI is growing, Big Bear has AI in its name, therefore it must go up. Many conducting online investing see it as a cheaper entry point into the sector, a way to get exposure without buying the heavyweights. The hope is that this small-cap name can capture a fraction of the growth that has propelled the entire tech sector, and that online investment in it now will pay off massively later. But that's a dangerously simplistic view. The reality is that BigBear.ai isn't competing with the large language models you see in the news. Its primary business, the very foundation of its revenue, is providing predictive analytics and decision support solutions to the U.S. intelligence community, the Department of Defense, and other federal agencies. This makes it a defense tech play first and a commercial AI play second. That 3.64% drop we're seeing today isn't just retail sentiment souring, it reflects the market's deep uncertainty about the timing and scale of these government awards, which are notoriously lumpy and unpredictable. This stock trades more on contract rumors than on the broad AI themes that move Apple stock. Let's look at the recent trading action. This stock doesn't trade quietly. The volume we've seen in recent weeks has been substantial, often spiking on days with no discernible news. This tells you it's a favorite for day traders and algorithms. You'll see massive buy orders execute on interactive brokers trying to front-run a potential announcement, followed by heavy selling just hours later. This volatility is precisely why some long-term investors, perhaps those using Schwab Intelligent Portfolios or Fidelity Wealth Management, are told to stay away. But for active traders using the Fidelity mobile app or SoFi trading platform, this volatility is the entire attraction. They aren't looking for a stable investment, they are looking for movement. The current slide to $7.42 isn't happening in a vacuum. The stock recently attempted to break through a key resistance level, failed, and is now testing a support level. This technical setup is crucial. Institutional players aren't just buying the AI story, they're watching the charts. They're also watching the company's cash flow statements. The expectation is growth, but the reality has been persistent net losses and significant cash burn. To fund operations and development, Big Bear has utilized at-the-market offerings, which translates directly to share dilution. Every time the stock rallies, there's a background fear that the company might sell more shares into that strength, putting a cap on the upside. This creates a challenging environment for anyone trying self-investing without understanding the full capital structure. We also have to consider the macroeconomic picture. BBAI is a small-cap stock. It's highly sensitive to interest rate expectations. When the Federal Reserve signals that rates will stay higher for longer, speculative tech companies that are not yet profitable get hit the hardest. Their distant future earnings are discounted more heavily. This is a factor that many retail investors, especially those new to investing sites, often overlook. They see the price move, but they don't connect it to the broad bond market or federal policy. Furthermore, its reliance on government contracts makes it uniquely vulnerable to discussions in Washington. A potential government shutdown, delays in passing a defense budget, or shifts in spending priorities can directly impact BBAI's pipeline. This is a key piece of investment help that many analysts fail to stress. BBAI is a political stock as much as it is a tech stock. The recent earnings report was a perfect example of this expectation-reality split. The market expected to see explosive revenue growth, mirroring the AI hype. The reality was more nuanced. Revenue did grow, which was positive, but the losses widened. The commentary from management was all about the sales pipeline, particularly in the commercial sector, and the progress on significant government programs. But the market is impatient. It wants profits now. For investors using SoFi Invest or Robinhood investments, who are accustomed to seeing tech companies scale rapidly, BBAI's path looks slow and arduous. They aren't just building an app, they're trying to integrate complex systems for massive bureaucratic clients who have immense security and reliability requirements. Let's talk about the institutional side. While retail might be driving the daily swings, the smart money is divided. You have some funds specializing in defense tech and AI taking small positions, visible in their 13F filings. But many larger funds, the ones that might hold Fidelity mutual funds or Fidelity ETFs, are staying on the sidelines. The float is relatively small, making it susceptible to short squeezes, which further adds to the speculative narrative and volatility. This isn't a stable holding for a Fidelity IRA or other retirement accounts. This is a high-risk, high-reward play in an individual brokerage account, one that requires active monitoring through platforms like Interactive Brokers Trading or Fidelity Brokerage. Using Robinhood fractional shares to take a small position might seem tempting, but the volatility can wipe out that small stake quickly. So, as BigBear.ai trades down 3.64% to $7.42, we are left with a clear picture. The expectation is that BBAI is a simple, explosive play on the AI megatrend, a potential competitor to the giants, a stock to buy on SoFi or Robinhood and just wait. The reality is far more complex. This is a small-cap, unprofitable defense tech company in the middle of a difficult business model transition. Its fate is tied not just to AI innovation, but to lumpy government budgets, fierce contract competition, and its own race against cash burn. The volatility we see today isn't a bug. It's the defining feature of a stock caught between a powerful narrative and a very challenging operational reality. Understanding this difference, the gap between the story and the balance sheet, is what separates hopeful speculation from informed online investing. The path forward for BigBear.ai is uncertain, but it will be defined by its ability to execute on these major government and commercial contracts, not by the daily chatter. This is a show-me story, and the market, as shown by today's price action, is still waiting to be shown. Disclaimer: this video is for educational and informational purposes only. It does not financial advice. Always do your own research before making any investment decisions. The stock market involves risks. Invest wisely. Comment, like, share, and subscribe. If you found this video helpful, don't forget to like, share, and comment your thoughts below. Your support keeps us motivated to bring you more stock insights every day. Huh?